The aim of this presentation, first and foremost, is first to highlight how you can buy REITs or how REITs are tradable in these markets that we have at the NSE, but also to set the stage to which REITs exist within the broader capital markets. And I know this will be useful information, first of all, to the investors in the room, people who you're thinking about buying REITs, but even importantly, to the promoters. When you're structuring your REIT, it's a question always comes, how are you going to raise this capital? Through which platform? How will it be traded? So that's what I hope we can discuss more about. So very quickly, and maybe it's relevant that this is here. So what do we wake up to do every day at the NSE? We actually wake up to do the first thing, which is inspiring Africa's transformation, right? So we hope to inspire both the Kenyans and the other Africans that are in the room, and also share some of the interesting things that we've done that others might borrow, as the Ghanaians have done in the past. You just come, you borrow, and you implement in your own market. So that's what we intend to do, and hopefully after the end of this, you can be inspired to invest in REITs for, you have some monies now that we are going towards Easter. It's end month as well, right? So use it well. So that's us. And the other interesting thing at the NSE is that we have embarked on a new strategy, 2025 to 2029. But I want to highlight two things in that strategy that are perhaps a lot relevant to REITs here today. And the first one is the first thing in this slide, which is on the top right corner in bold. 9 million active retail investors. Now, capital markets all over the world, or the main reason why capital markets exist, it's really two things. The first one is to mobilize capital to impactful projects that allocate capital efficiently. The second thing is to create accessibility and democratize wealth, right? So it makes no sense to have a capital markets that only serves an elitist view, right? Which is why we want our capital markets to first and foremost be speaking to the mwananchi in Kenya first before we can go and attract other investors out there. So our very key focus actually is to attract retail investors. Now I mentioned this here because REITs are just one of the offerings that are available in the capital markets. And from our perspective, it will be best if these could also be an asset class that attracts retail investors. If you think about it, the REITs are collective investment schemes, right? We all know collective investment schemes. Maybe we've invested in money market funds before, equity funds and this type of thing. And we can already see the impact that these money market funds products are bringing to mwananchi, to retail investors. One, because they're accessible. Two, because they give you a good return. Now, the whole point of REITs was to have the same benefits that money market funds are offering, but to real estate. Because, if you wanted to buy this building, for instance, it's very capital intensive. So the REIT then becomes the tool to which we can pool our capital together and then buy this building. And that's what we want to see more of. We want to see the local person investing more in REITs so that they can have some ownership in at least productive assets across the country. The other thing I want to highlight is the one closest to me, which is 50 diverse listed funds and indices. So whereas we want to grow the capital markets by increasing the number of investors that come, we also want to increase the offerings that are there for investors. And we actually think we have a higher target for listed funds than we have for listed companies, because we think this space of REITs and ETFs and these diverse products has a lot more opportunity to grow than it is to get a normal company to IPO, for instance. So to the promoters in the room, no pressure. These 50 diverse listed funds, this is why we are here. We want you to be part of this statistic so that we can have a lot more listed diverse funds. Now, very quickly, how are things like today at the stock exchange? If you are being honest, when you think about the stock exchange, you think about what? Shares first, stocks, and bonds perhaps. And rightfully so, those are the two largest, or at least largest size of products that you can buy. So as of today morning, the size of bonds, largely government bonds that are available at the NSE is worth 5.7 trillion. And the value of stocks available at the NSE today is 3.2 trillion. So quite significant, but perhaps now take this into context with the size of REITs in the market. So the size of REITs in the market currently is around 30, give or take 30 billion. So you can see how that compares to the other instruments that we have available on the stock exchange. But that means that there's more room to grow on the REIT space, because on the equity side, these have been there for quite a number of time, and this is where we are. So that's just a snapshot of at least the products as they are. But importantly, and this is where we want to, this is now we are starting the inspiration of transformation that I was talking to earlier. It's important for us to understand that, you can derive real value from the stock exchange, right? So I have two tables here and a graph below. The first table shows how much money was made last year from stocks, just from equities and bonds. So you can see that nearly all indices were up 50% and above in just 1 year. But perhaps most significantly, it's one thing to be able to gain value. It's another thing to be able to access the value. So the other table, the one closest to me on turnover, what that shows is, are people actually buying and selling? So for instance, the problem, for instance, with real estate in this market is that you might have a real estate worth a certain value, but when you go to sell, it becomes problematic to sell it. Maybe it takes a lot of time to get someone to buy and whatnot. So the one thing that we are tracking very closely and which we are quite proud of is that there's a lot more trading activity happening at the stock exchange across all products. So you can see, for instance, equities by themselves traded a sum of 145 billion last year. That's money that actually exchanged hands. The value of equity that traded is actually higher than the market cap of REITs in the market, meaning that there is liquidity out there to even accommodate all the REITs as it were within just normal trading within the stock exchange. It was also a very interesting year for bonds, which traded nearly 3 trillion in value in 1 year. And also our other markets, derivatives and USP, which I think we'll discuss more in this presentation. You can see how there was increased liquidity, at least if you compare the last year to the previous one. Now, importantly, the chart below just shows, it's a show of investor wealth and how investor wealth has been progressing on the stock exchange. So you can see that's what 15-year period, 2010 to 2025. That's how the trend has been. You can see it has its ups and downs, but generally it's an upward trend. So as at the end of 2025, the value of all shares on the NSE was 2.9 trillion. Now, in the earlier slide, I showed you that currently, as of today, the value is 3.2 trillion. So you can already see this year, if you had bought these, assuming you had the money to buy all shares on NSE at the end of December, and then sold them today, you would have made what? A 200 billion gain, give or take, despite all that's happening in the global environment, right? So as much as stocks are currently in this given month, as much as the values have been depressed, it's still an increase to how they closed in the previous year, right? And by the an interesting statistic, I think in this last month that we've just come from, the stocks have gone from 3.4 trillion to 3.2. Like, it's a significant decrease in 1 month, but it's because of those factors that we are seeing in the global environment. Now, maybe this slide is more relevant to people who are considering buying the NSE share itself. This year, Q1, and it's important to highlight. So this is, if you take it over a long enough period of time, how has trading been across different things on the NSE? So you can see I'll start with the first chart as we progress. For equities in particular, the first 2 months of this year, January and February, traded more value than the whole of Q1 last year. And that's the case for bonds. In derivatives in particular, the first 2 months traded more than up to Q4 last year. Actually, as of today morning, the derivatives market has exceeded turnover for the last year entirely. And at this point is what I want to highlight. People always think that retail investors are not sophisticated. Our derivatives market is largely retail trade. It's largely dominated by retail traders. And you can see in the first 2 months of this year, They traded value worth 188 million. And derivatives are quite a complex product that you might not associate with retail investors. So which is why, again, we think that we need to serve this segment a lot more, because if given the right product, they have shown that they are able to appreciate some of these things and also take advantage of them. Finally, I think this is the last chart on statistics, and then we can talk about USP. There's one thing we like to keep track of, which is how much are local investors trading vis-a-vis how much are foreigners buying. If you looked at this chart 3 years ago, for the 3 years ago, and then you take 10 years back, trading at the NSE was usually dominated by foreign investors. But you can see clearly the last 3 years have been quite a turnaround. 2023 was an outlier purely because there was some significant one-off trades that influenced that shift to local participation. If you take out those trades, it will still be foreign dominated. But you can see from 2024 onwards, the local participation has been quite positive on the stock market. The other chart just shows that foreign investors have been net sellers for the past 6 or so years, and this trend has even been longer. Meaning, again, that at least we are seeing the local populace being more appreciative of the opportunities available on the stock market and taking advantage of it. These statistics are just there to also set the stone, because REITs do not exist in isolation. When REITs are listed on the NSE, they trade alongside these other products. So if these are the trends we are seeing in these other products, then these are also perhaps your target investors for REITs that you're looking to do. So at least it's a good thing that we've been seeing sustained local buys of our securities, which also means that securities are likely to be less volatile. For instance, now that there's all this global tension, foreigners are likely to sell. But you are here in Kenya, if you are seated here, you cannot stop Iran from firing a missile right now, right? But what you can do is you have savings right now that need a place, and you're using Safaricom, you're using products of companies that are already listed. So for yourself, it's actually not, you're not finicky. You can't sell just because of what's happening out there. And so it means that even volatility, now that we are seeing more local participation, it means that volatility is likely to be more contained going forward. Just 2 things. Again, this is a couple of highlights of this year. The first one is, sometimes we need to be proud. This KPC IPO was Africa's largest IPO this decade, right? This is that inspiration I was telling you about to our other African colleagues. But we also had a USD listed REIT this year, which is ALP. I think they also did a presentation yesterday, and they're also listed. So clearly, you can see there are things happening, and let me say this is all in 1 quarter's work. Wait till you see now the other quarters that we're remaining this year. Now, on the other side, the previous slide that I showed you is companies that you can invest in that have come to market. Now, this is how guys can invest today. Case in point, yesterday I had the Zimbabweans telling us about some applications that they are using to access their stock market. So here in Kenya, we are saying it's even simpler. You just need 2 things. You need an M-Pesa account, first of all, and you need money in that M-Pesa account. If you have it, this is a live QR code actually. For those of you who are not converted, you can scan that QR code and you can buy shares by the time I'm finishing this presentation. All real time. Actually, you can buy and sell by 3 p.m. by the time the market closes, and you can get a capital appreciation. So at least these are some of the initiatives we are doing, and this speaks to the focus on retail investors that I was talking about earlier, right? So where someone can just, from the comfort of where they are, get access to the stock market without a lot of hassle. So I'll spend a bit of time here, which is the NSE public markets versus the private markets. And I think this is now very relevant to issuers who are thinking of doing a REIT and how, thinking about how this REIT will be traded. So the first thing is that how we view it ourselves is that we view NSE as having two segments broadly, one for the public markets, then the other for the private markets. For the public markets, there are two mechanisms that trading can happen, or there are two platforms where trading can happen, which is what we are calling the main investment market segment. That's what refers to MIMS, or what you see in the program. It refers to the main investment market segment. Usually, and also we have an SME investment market segment that's also there. Maybe the key distinction between the two is that the main investment market segment usually is for the larger companies. There are a lot more requirements, but one of the key ones is that the company has to have assets more than $1 billion. A lot of properties in Kenya and a lot of REITs will then tend to satisfy that bit, because REITs are capital intensive in nature, so the value of property tends to be on the higher side. We also have a market for SMEs, which is SMEs that are between 100 million and 1 billion can actually be listed and traded on the stock exchange. That's what we are calling the SME market segment. Then on our private market side of things is where we have the USP. And the USP in full stands for Unquoted Securities Platform. Now, our USP is a lot more flexible with regards to requirements. It doesn't have capital requirements or things like that, because it's a private market. The thinking here is that it's a market where either sophisticated investors or private investors get to participate in it. So there are not a lot of requirements to join in. Now, who should consider going to public markets? Who should consider going to the USP? So there are two things here. In the overall regulation that governs capital markets is called the Public Offers and Listings Regulations, or POLD in short. And a POLD, there are two ways in which you can raise money. One, through a public offer. Two, through a private offer. Now, there are two types of public offers. First one is what is called unrestricted, which is what Kenya Pipeline did. It means there's no restriction on investment. Anyone can buy into it, be it a retail investor, foreign investor, local, anyone can invest. So that's a typical IPO, what we call unrestricted. But there are also other types of public offers that are restricted. And by this, we mean that you have a share or a REIT that you are looking to raise money for, but you want a minimum ticket size, for instance. Like, for example, even in the D-REITs regulations that we have here, D-REITs by definition are restricted, meaning that only someone with 100,000 can invest in it. So it's not just anyone. You see, in the normal stock market, the minimum you can buy is one share of any company. But which means that you can buy a share for 20 shillings or 30 shillings. But a restricted offer, it can be restricted in two fronts. Either you say you don't want to accept a minimum of a certain amount, or you can even be restricted to a particular investor class. So if you are doing either an unrestricted or a restricted public offer, the main market works for you. Now, on the USP side of things, you can do a restricted public offer, which is the same type of offer. You have shares you want to raise for, but you want to restrict either the minimum ticket size, but on the USP, there's also an additional layer of flexibility. If you also want to restrict the trading price in which the shares will trade at, you can do that on the USP, but you cannot do that on the public markets. The other thing you can do on the USP is that we have other types of offers called private offers. Usually these are offers of where you are targeting less than 100 shareholders. They tend to be covered under CMA as well. But these private offers, let's say, for example, you're a member of a club, like Capital Club, and you have an offer that is only restricted to the members of that club. That's a type of a private offer. So those ones can be tradable, can be listed on the USP. Now, with regards to approvals, what do you need to get on the public markets and the private markets? Simply put, for the public markets, you need both CMA and NSE approval. On the private markets, if you are doing a capital raise, you also need both CMA and NSE approval. But if you're just, let's say, for example, you have a company that has 5 shareholders already. If you want to provide a trading avenue to which these 5 shareholders can exit their shares, you can just list that company as is on the USP, and you only need NSE approval for that kind of transaction. But obviously, you can see there are some benefits that are applicable to the public markets, because the public markets are meant to democratize access to wealth as opposed to the private ones. So you can see when REITs, for instance, are traded on the public markets, for lack of a better word, there are no taxes applicable when you are trading. But on the USP side of things, the seller, if someone was looking to sell shares in a counter listed on USP, the seller would pay 15% of the capital gains should they sell, and the buyer will have to pay 1% of their consideration when they are buying shares or REITs that are listed. And then finally, for liquidity and visibility, as you can already tell, the public markets are visible and accessible by everyone. Even if you do a restricted public offer, it's still visible by everyone participating in the public markets, just that it's not accessible to everyone. So in the public markets, there's a lot more visibility as compared to USP, because USP also has a limited number of investors that tends to look at this kind of thing. And just to highlight that point is, this is now the current status. These are the REITs that we have in our market. And I've highlighted where these REITs are listed and when they listed. And maybe this is an interesting observation that the earlier REITs, so the first REIT, the ILAM Fahari I-REIT, I've stated the trading platform as USP but it has an asterisk because when it first came to market, it was tradable in the unrestricted public markets. People could buy it like any other company, but they then restructured and then recently listed on the USP. Then came the Acorn REITs that are all have been tradable on the USP for some time. Then you can see from 2022 onwards, the new REITs that have been coming to market have been listing on the public markets, but restricted segment. And perhaps most importantly, or most excitedly, I think the other room are doing a deal room, right? And the REIT that's doing a deal room in that side is looking to come back again to the main unrestricted market because they want to attract retail investors. So maybe there's a progression here where you can see there was a period in which REITs were coming to the USP, but now there's a bit of flexibility, at least from issuers, where they are now also considering these restricted subsegment of the public markets because, one, there's a lot more visibility, there are a bit of trading incentives, and also, you can get to have proper price discovery on that side. And just to highlight trading activity, this is the final data, I promise, that I'll show you, but this is how REITs have been trading on the NSE. So the very first REIT that was ever listed came to market in 2015, and that was ILAM Fahari I-REIT. So from 2015 to 2020, they were actually the only REIT in the market. And all that trading activity that you can see was happening in the main stock exchange. Then in 2021 and 2022, we got the new Acorn REITs that I've just showed you before. And you can see at the onset, they were trading quite a bit with regards to trading activity. Then in 2023, two things happened. The first one is that we had the first restricted REIT being listed on the main market, which is LAPTRUST REIT. But also, this is when Fahari also did the conversion to become a restricted REIT and convert to the USP. So what happened is that year that LAPTRUST was doing that conversion, they actually did a lot of trades in the public markets so that they can buy out a lot of retail investors, which contributed to trading activity. And then onwards, you can see from 2024 even to date, the green segment, which is trading on the public markets, has been quite high. The reality is that it's because these are largely LAPTRUST REITs, if we are being honest, and I think it's more to do with portfolio rebalancing, allocations, and whatnot. But you can see that this is just what the progression has been, and what we hope to have is that we hope to have, first of all, more REITs come to market, and also more trading activity across both USP and the main trading platform. It's likely that even going forward, the main trading platform is the one that will have a lot more trading activity. One, because it's one, cheaper, and there are no tax burdens during trading, but also just because of all that visibility that comes with it.